What a day to be alive. This is Crypto Headlines, where you get the information you need to stay on top of what's happening right now in crypto. Every episode, we cut through the noise and focus on what actually matters, the real developments shaping the crypto market. No hype, no speculation, just clear breakdowns of the most important stories. If you want to follow along, visit the Crypto Headlines website at crypto-headlines.com, where we track the sources behind every episode. And if there are tools you think we should use, creators we should be following, or sources we should track, send us your suggestions. All right, let's get into it. All right, so over the last 24 hours, the market has moved higher overall. Let's go ahead and pull up some of the charts here. Some key numbers. Bitcoin is trading around 69,000, up 4.5% over the last 24 hours. Ethereum is around 2,000, up about, give or take, 4% as well. And the total crypto market cap is around 2.4 trillion. Volume in the last 24 hours is roughly about 100 billion. All right, so there's a couple of significant leverage liquidations. About 1.17 billion in positions were liquidated in the past 24 hours. And liquidations happen when traders using leverage, essentially borrowed money, are forced to sell their positions when the market moves against them. So when large numbers of liquidations occur, it can amplify price moves in both directions because forced buying and sellers enter the market. Okay. Looking a little bit deeper at derivatives positioning, Bitcoin's long to short ratio is about 1.3%, meaning there's more bullish leveraged positions than bearish. Funding rates across major assets are close to neutral, suggesting the market is not heavily tilted in one direction. From a macro perspective, there are two major influences appearing in the news. First, obviously, is the oil prices have surged towards $100. This is due to geopolitical tensions and concerns about the Strait of Hormuz, which, as we all know, is one of the most important oil shipping routes in the world. Second, global markets are reacting to uncertainty related to conflict in the Middle East, which has created volatility across traditional markets. Interesting, several reports note that Bitcoin has recently been outperforming both the stock market and gold during this period of geopolitical stress, which is very interesting to note. Now, that doesn't necessarily mean that Bitcoin is acting as a safe haven asset just yet, but it does suggest investors are paying close attention to how it behaves during global uncertainty. Overall, the crypto market movement appears to be driven by a mix of macro uncertainty, institutional activity, and liquidity shifts within the crypto ecosystem. All right, so let's go ahead and break down some of the biggest developments that we've seen in the headlines here. One of the first themes that is pretty apparent is the major Bitcoin accumulation and ETF flow changes. There's been large Bitcoin purchases by institutional investors. The major headline comes from a report that Strategy purchased 17,000, almost 18,000 Bitcoin for about 1.3 billion. Large acquisitions like this obviously matter, mostly for two reasons. First, they remove a substantial amount of the supply from the open market. And secondly, they signal continued institutional confidence in Bitcoin as a long-term asset. At the same time, however, Bitcoin ETF flows appear to be cooling slightly. Reports indicate that Bitcoin ETF inflows recently totaled around 620 million, while other coverage noted 568 million in net additions during the week, despite the late streak of outflows. This combination creates kind of an interesting dynamic. So on the one side, institutional investors continue adding Bitcoin exposure through ETFs. On the other hand, momentum in those inflows may be slowing a little bit compared to previous periods. Another layer to the story is the macro environment. As we mentioned, oil prices are rising towards $100 per barrel, and geopolitical tensions in the Middle East have added uncertainty to global markets. Some reports note that during this period of volatility, Bitcoin has been outperforming both stocks and gold, as we mentioned earlier. But But really the key to the uncertainty here is whether this trend represents a temporary reaction to geopolitical events or the early stages of a broader shift in how Bitcoin is viewed by institutional investors during times of uncertainty. So we're going to have to kind of wait and see on that. The second theme is Solana's rapid growth in the stablecoin liquidity. So Solana and the movement of stablecoin liquidity across the blockchain networks has gone up. One report indicates that Solana has processed around 650 billion in stablecoin transfers, highlighting a pretty dramatic increase in the activity on the network. Another development involves the Treasury minting roughly $250 million worth of USDC, which also contributed to the liquidity shifts within the Solana ecosystem. And to understand why that matters, we need to talk briefly about stablecoins. So stablecoins are cryptocurrencies designed to maintain a stable value, usually pegged to the US dollar. They're widely used as the main liquidity layer for trading and other things like DeFi applications and payments inside the crypto markets. But when stablecoin activity grows on a particular blockchain, it's often signals increasing trading activity, DeFi usage, or network demand. And in this case, some analysts are observing liquidity shifting away from Ethereum and towards Solana. Ethereum has, historically been dominant network for decentralized finance and stablecoins, but Solana has been gaining some traction of its simply because it's lower transaction fees and higher throughput. This allows more transactions to occur quickly and cheaply. Another report adds that an additional data point, Solana recently surpassed Ethereum in the number one real-world asset holders for the first time. So real-world assets are often abbreviated RWAs, and they refer to tokenized versions of things like bonds, commodities, or other traditional financial assets placed on the blockchain networks. These trends continue, and it could signal a gradual shift in where certain types of crypto activities are happening. However, it's important to keep several of these uncertainties in mind. Stablecoin flows can be highly cyclical. They may move quickly between chains depending on incentives or short-term market conditions. So while Ethereum or Solana's growth is notable, it doesn't necessarily mean Ethereum's position in the DeFi is weakening at all. Yeah, all right. And the last theme we want to go over is stablecoin, the stablecoin versus CBDC debate. There's another discussion that's gaining quite a bit of attention today that involves the relationship between stablecoins and central bank digital currencies, often referred to as CBDCs. A CBDC is a digital form of government-issued currency, essentially a digital version of the country's national money controlled by its central bank. Stablecoins, by contrast, are typically issued by private companies but attempt to maintain a stable value relative to the fiat currencies like the US dollar. Some analysts are beginning to question whether the differences between the two are starting to blur. The argument is that if stablecoins become heavily regulated and tightly integrated with the traditional financial system, they could begin to resemble digital versions of government currency, even if they are issued by private companies. This discussion is important because stablecoins play a central role in crypto markets. They act as the primary trading pairs for many exchanges, and they're widely used in decentralized finance systems. So how regulators eventually treat stablecoins and how they compare them to CBDCs could shape the future structure of crypto markets. But for now, this kind of remains to be a policy of philosophical debate rather than immediate market-moving events. But it is a topic that continues to gain attention as governments around the world explore digital currency initiatives. All right, so just to summarize the big developments today, institutional activity around Bitcoin continues. Solana seeing some growth in stablecoins. There is a debate ongoing over stablecoins versus central bank digital currencies. So, if you enjoyed this breakdown, make sure to subscribe so you don't miss the future episodes. And again, if there are any tools you want to build, creators we should follow on the site, or sources we should track, let us know. Your feedback really helps improve the Crypto Headlines project, and we couldn't do it without you. So thanks for listening, and have a great day.